everyone, I'm Mirela Ciobanu, lead editor with The Papers, and I'm thrilled to welcome payment expert Neira Jones to our Web3 payment video interview series. In 2025, The Papers is diving deep into Web3 payments, aiming to bridge the gap between traditional financial players and the rapidly evolving Web3 ecosystem. Our goal is to help businesses and consumers navigate and confidently adopt Web3 payment options for faster, more efficient money movement worldwide. Today, Neira will share her insights from her latest book, Beyond Payments From Centralized to Decentralized and Everything in Between, and break down key concepts like TradFi, CeFi, CeDeFi, and DeFi for those eager to explore the Web3 payments movement. I highly recommend her latest book, which brilliantly unpacks the complexity of the financial ecosystem in an engaging and accessible way. Without further ado, let's dive in. Hi, Nira. Happy to
Hi,
have you here again.
delighted.
Yeah, last time when we met, we spoke about real-time payments fraud, but this is just one piece of the payment puzzle. Today, we take a step back to look at the entire payment ecosystem and transaction processes. So, you recently launched Beyond Payments from centralized to decentralized and everything in between. Can you tell us more about the book?
Absolutely. Yeah, this was a bit of a journey for me. And as you know, I wrote Understanding Payments the year before. And really, the aim for me, after being pushed by my mentor to write the book for such a long time, it was a case for me of reflecting. Well, I could probably write one because when I started in payments, way back, longer than I care to remember, I actually wanted and asked my friends and payments professionals, where can I find, a book or a resource that would explain to me how the whole thing works? And there are some very interesting books around, as you know yourself, Morella, but there was not one book that tells you, here it is, this is how it works. So, and I've been delivering courses, as you know, for a very long time. So I thought, well, I could probably do that. So I started doing it, and it was a journey for me, not only about putting down what I knew, but thinking that it would actually help people that either want to get into the industry, understand the industry a bit better, want a refresher, and where something is all in one place, not just about card payments, not just about bank payments, but everything around payments. And this is how it works. And this is in plain English. And there's cartoons, and they're a bit fun. And let's see how it works. And I was absolutely overwhelmed by the reception for my first book. I knew when I wrote the first book that I had a second book in me because, of course, these were the fundamentals in understanding payments. And as you know yourself, the payments industry moves so fast. And we've got this blurring of boundaries with new technologies such as blockchain and artificial intelligence and all these things. Well, how do we make sure we keep our knowledge up to date and consistently try to understand an industry that is permanently reinventing itself? Now, the fundamentals remain the same, but there's so much on top of existing infrastructures and new infrastructures trying to link into it. So I wanted to make it simpler for people. And I knew exactly what the table of contents would be for the second book. When I wrote the first book, it was just a matter of putting pen to paper, so to speak, and writing it. So this is how Beyond Payments was born. And again, that was an experience for me because if you write a book about the fundamentals of payments and you've been in payments for a while, it's relatively easy because the fundamentals don't change. But when you try to explain simply and clearly how the industry is evolving with new technology, that's a much more difficult proposition. So the second book is almost twice as big as the first book. And I gave myself about 8-9 months to write it. And I was in my 7th month of writing it when I realized that the book was becoming far too big. Because I had so much more to say. So I contacted my publisher and I said, look, this book is going to be so huge, nobody is going to want it because it needs to be the size of a book. And you have the size of the first book here, as you can see, and this one is Understanding Payments. And I have Beyond Payments, which is the pink one. I love pink. But if you compare the size of the two, the second one is actually so much bigger. And this is because there's so much more to say as to how the industry is evolving. And because I wanted to make it simple, clear, and attractive to people from all walks of life. So I'm very clear on what the objective was, which is this is a payments book. This is not a blockchain book. This is not a DeFi book. This is a book for people interested in payments, whether they're new or they're already established, that want to understand how the payments industry is moving. And therefore, in there, you have a very vast audience. You have an audience of lawyers that want to understand the regulations. So there is a chapter for that. You have an audience of payments product managers that want to understand how their products need to evolve over time to take into account new technologies. You have an audience of people who are already in payments but want to understand a bit more about blockchain. So there is a chapter about blockchain. You have an audience of developers who are in the payments industry and or may not be in the payments industry, but more in the DeFi industry, and they're trying to develop new application. Well, how is that different from developing legacy systems? So, and I was very conscious that not all of the chapters will be of interest to all of the people. So therefore, this book has 7 chapters, and each chapter can actually be read independently. So if you're interested in developing blockchain applications and services, then there is a chapter for that. You don't have to read it. And of course, I followed the same structure as in the first book. If you recall, Morella, I have the duck. And the duck is a little gimmick that actually helps you summarize a chapter or a section. So if you don't want to read the whole chapter, jump to the duck, and the duck will tell you, well, this is what it's about. This is what professionals should be looking for. And then you can just look at that. And if you want to know more, then you can read the chapter, but you don't have to. So there's always the duck. And of course, we have John and Susie in the cartoons that explain to us how stuff actually works. So the first chapter in the book invariably is actually about blockchain, and it's explaining, the fundamentals of blockchain and how they are actually different from traditional payments, because this is a payments book, but also drawing the similarities. So when we talk about some very well-known concept of authorization, clearing, and settlement, let's make no bones about it, there are the same concepts exactly in blockchain infrastructure when they apply to payments. There's also authorization, clearing, and settlement. It's just done differently. And it's basically making those parallels and making people understand how this works. And of course, I always want to be practical when I write anything. And therefore, we have a whole chapter which is called Transacting in a Decentralized World. And essentially means is, well, what is it that PayPal is doing of late with the stablecoin? Why is Visa getting involved in, making their network more suitable for interlinking with various architecture? Why are they involved in stablecoin settlement? Why are many traditional and incumbent players getting involved in the blockchain space? So that whole chapter is all about that, with very clear and real life examples. So there's plenty of references, like in the first book. And of course, you have many other things to look at, and I wanted it to be a modular book so that people can pick it up, look at the section, how does that work, and why is it, that legacy systems are developed largely in COBOL, certainly in banking, but what are the new tools that people use when they actually develop decentralized application? And is it so different? And who's involved? And one of the things that really staggered me as I was writing the book is actually when you look at best practice, when you look at developing decentralized application, well, the fundamentals of development or software development still apply. I mean, you need to be rigorous, you need to test, you need to make sure that the security is appropriate, you need to involve third parties that will help you for doing that. So in principle, at a high level, it's the same thing. But how it's actually done is very different because the technologies are different. So you have companies that specialize in doing these bits for you. But as far as best practice is concerned, you can pick out, the best practice that the doc is telling you about when developing application, and you can apply that to traditional systems because essentially best practice is best practice. People often forget about that because they think when you develop an application that is based on a smart contract and that's inherently secure and so on and so forth, but smart contracts can fail. What do you do when they do? So I'm trying to explain that is in very, very simple terms. And in there also, we have a completely separate chapter, which is talking about virtual and digital assets, because there is a lot of confusion in that. So there are cryptocurrencies and there are meme coins and privacy coins and stable coins and NFTs and, trying to understand how all of these work, what it means, what the risks are, what the characteristics. So is really interesting, and that's one of the things that actually make this book much bigger than I originally planned. Which, as I was writing this particular chapter on digital assets, of course, in there I have to include central bank digital currencies. And as I started writing that section, that chapter was becoming far too big. So I had to split that section in two. And that happened throughout the book, which is why it has 7 chapters. And now we have a completely separate section, which is section 7, which is all about central bank digital currencies, because they were worth a chapter in their own right, because as you know yourself, there is a lot of confusion as to what CBDCs are and are not, and what they could do, and the risk associated with them, and so on and so forth, and the differences in characteristics. So we have a whole chapter on that, and that was a complete journey, and again, a testimony to the payments industry, which is, in my opinion, certainly a very large and friendly family. And I really am completely humbled with the help that I have received from my friends and reviewers in giving me their insights and their opinion, and very interesting discussions throughout. And the book was finally born, and it was launched at the Merchant Payment Ecosystem Conference in March last month, which was great. So and because I wanted to essentially give people the tools, equip them with the knowledge to ask the right question and be more and more aware. One other thing that I didn't find when I first started in payment is a glossary. Now, it's not that there are no glossaries. There are lots of glossaries, and there are lots of commercial payment companies that provide a glossary, and it may have 30 entries, and the Bank of International Settlement has a glossary, the ECB has a glossary. So there are lots of glossaries around, depending on what you're looking at, but there wasn't a glossary for the payments industry, how it evolves and modern. So when I started writing the first book, which includes a glossary, so does the second book, I also started writing a separate glossary, which is this one, which is the A to Z of payment. So and this one has 1,600 entries, all the letters. For each letter, it has a cartoon with John and Susie, giving you some terms that may be interested from from that particular letter. So and it ranges from the very beginning of the payments industry to where we are now talking about blockchain infrastructure. So if we have letter Z, for example, in there you will find the zip zap machine, which some of us may remember, but you will also find zero knowledge proof, which is particularly appropriate to blockchain infrastructures. So we now have a trio, and I wish I had that trio when I started in payments way back, because it would have made my life much simpler.
Yeah, great. Now that you presented key themes and chapters dedicated to the audience, and then the glossary, it kind of makes sense. The thickness of the book, and actually makes me wonder why it's not even thicker. Because in this book, even if you talk about blockchain and all these new developments, innovation, all the time you are making also reference to the traditional stuff, to the things that blockchain builds on top of,
Yeah,
and then it's kind of actually covering the whole thing, the whole space, and it is a lot of information there. But
yeah.
now
But
let's
if
yeah.
if I may, answering your the question that you just asked, it makes you wonder how the book is actually not much thicker. It would have been, and when I spoke to my publisher on the 7th month I was actually writing the book, I said, look, it's going to be too big. I have a fourth book. And the fourth book is actually going to be called Payments Unbound. And it's navigating the opportunities and peril of payment systems. And this book, and I couldn't cover that in this current book beyond payments, it's already big enough, is about all of the things that we're starting to talk about more in anger than in a kind of prototyping way. So it's about AI agents, it's about quantum, it's about all of the things that I didn't cover in Beyond Payments, because basically there was no space anymore to do that. So there is a fourth book in the making. I'm a bit tired now, as you may imagine, Mirella, so I'm putting my pen down for a bit. But there will be a fourth book coming at some point, called Payments Unbound, continuing the series. And I'm thinking, we've got the blue and we've got pink and we've got green. So I think the next color is going to be orange.
Oh, that's nice. Now we also have the color palette. But returning to the book. So in your book, you start with when you present blockchain, you start with traditional finance, TradFi. What exactly is it? Is it at the risk of disappearing, or do you see it evolving? What will happen to the major players in this space?
Uh, uh, So answering your second question first, is it at the risk of disappearing? No, absolutely not. This is how it works. TradFi is what we used to, I like to call it sort of the grandfather of finance. This is how
Okay.
stuff works. So TradFi will always be there. We know it. You rely on that car in your garage. You know it works, and you know exactly how it works. So there is obviously, as you know, centralized control, and it's regulated. It's completely regulated. We know where we are. There are rules, laws, regulation. You know the vocabulary. You know everything, and the services are very familiar. So we've got not only payments, we've got banking, lending, savings account, all of these things, and we've got investments. The characteristic of TradFi, or the traditional financial infrastructure, is it's been there for a long time, and we've got legacy systems. But if you look at the evolution of all of these systems, they have evolved with the times. If you recall way back, when I started in banking, not even payments, we developed systems in COBOL. We know where we were. There were not even any relational databases at the time. So if you look at the evolution throughout, suddenly we started having new infrastructure, and we started having databases as opposed to flat file systems. And then we started being more digital. We started migrating to client server. Do you remember when that was the big hype, talking about client server? Then we started moving towards more cloud infrastructure. And now banking apps are part of life. Everybody has a banking app on their mobile phone. So this industry has moved on with the times, but its characteristic is it moves slowly, which is why you had new entrants and incumbents not encumbered by legacy systems who were able to launch new product services companies very, very quickly because the technology has evolved so fast. So this is where you have the neobanks like Monzo and Starling and N26 and all those guys being able to do the innovation so much quicker than traditional incumbent players who are incumbent by legacy and perhaps also a culture that is not suitable to digital innovation when compared to digitally native organizations. So will it disappear? No. Will it evolve? Absolutely, yes.
Mhm.
It will absolutely evolve. We've seen that through many partnerships, many services being offered. And I mean, we've got a very, very large player worldwide, such as JP Morgan, for example, who have been using blockchain in a wholesale context for a very, very long time and very successfully. So TradFi here to stay. Will it evolve? Absolutely yes, especially now. As we were talking in our last interview about real-time payment systems, because those also are evolving
Fast.
very fast, and that's what consumers like you and I are looking for: something that's easy, something that's fast, something that's secure. And one of the things that TradFi perhaps has in a retail context over perhaps newer technologies and infrastructures is you trust them. I mean, you trust them in your heart. You actually do because you know what they're about. You know you're protected. You know there's regulation where perhaps there may not be as many in newer infrastructures. So no, here to stay is the short answer.
Okay, okay. And you also mentioned the Monzo, Revolut, and within the book you had terms like CeFi, and actually it's the first time I heard about CeDeFi, centralized finance, and centralized, decentralized finance. And I was curious, Monzo, Revolut, do this apply to this type of finance?
Well, CeFi is basically a small evolutionary step from TradFi for those players who want to dip a toe in the waters of decentralized finance. So
Okay,
and essentially with CeFi, obviously there is still centralized control. Let's make no bones about this. So, but they may use uh, uh, technologies or features that appertain to blockchain infrastructures. So essentially, it's the first date of traditional finance with blockchain, and essentially financial services or application, but can be developed, but the participants are actually regulated financial services institutions. So they are leveraging the potential of the technology, the blockchain technology, but they still offer familiar financial services which operate within a centralized framework. So the thing is, because everything in traditional finance has been fine-tuned, especially in retail, for the consumer. We take it for granted. I talk about that in my first book. That when you use your card and you go and pay for something, it's gone through all of the network and done all the checks and come back before you can actually see the tick on the terminal. There is infrastructure behind that, and for us, if we're doing that, and if it's going to take more than a millisecond, you will moan because you want to get out and get your stuff and get out. Now, if we look at newer infrastructures, well, in a retail context, it may be a bit slow. So, as from a consumer point of view, so that's what we have to look at. So it depends on the services. So the speed might not yet be there for the kind of applications that we are actually used to in retail payments, but in applications where latency is not so much of a problem, such as trade finance, for example, this may be a very good thing because we know processes like correspondent banking are very complex and also very slow. So CeFi is actually an efficiency play, but not so much in retail payments.
Okay. And now let's go to the rebellious grandson, or to the revolutionary movement brought to payments, DeFi, so decentralized finance. What is it? What unique opportunities does it bring to the table, and how can consumers and businesses benefit from it?
So DeFi, there's a lot of misconception about that as to why DeFi is and isn't, because people tend to bundle everything that's to do with crypto into DeFi, which is not the case. Yeah, so it's not. DeFi is in my opinion, a very specific thing, and it's a very generic term. So it's basically decentralized, and I stress the decentralized element of it, financial services in an open infrastructure. So we're not talking for example, CeFi, where it's not an open, it's limited to a number of players, and the control is actually centralized, that operate on a permissionless basis. So we're not talking about permission blockchains like in CeFi. And obviously, settlement is done on the blockchain. The users themselves control their assets, and you can have many services. So you can have investment, you can have insurance, you can have asset management, you can have payments, you can have lending, and trading as the most common applications. So if we look at DeFi, first of all, decentralized control. So that's one of the things we're looking at. So that's very different from CeFi. The transparency is actually given to the people, so to speak, because these are public ledgers. We're not operating on permissionless blockchains here. And of course, who does the heavy lifting of the traditional processes we're used to, such as authorization, clearing, and settlement? That's controlled by smart contracts. So smart contracts will actually have the logic of what it is that the product is in it and how it's supposed to work. Now, because of this very decentralized nature and giving the users control of what they're actually doing, as you may imagine, there will be limited compliance or limited regulatory oversight. And the reason being is that regulators cannot pinpoint one single entity as responsible for one single action. Which is why when you look at any of the crypto regulations around, you will see, for example, that centralized exchanges, so centralized exchanges such as Binance, for example, are regulated. You will do KYC AML if you want to have a Binance account, and you may not even be able to have a Binance account depending on the geography you actually live in. So, and the reason why this is possible is because you can pinpoint it to one entity and make them responsible. Whereas if you have a DeFi service, nobody is responsible for it. So therefore, you can't pinpoint and go and regulate someone because there isn't someone. There's no centralized control. So it's much more difficult to achieve, which is why you will see all decentralized exchanges are actually unregulated. And because it is kind of almost impossible to do that. So a change in attitude in governance and how it applies is needed in that area, and I talk about that in Beyond Payments. So and there's a simple way of determining what can be classified as a DeFi service. So first of all, does it involve the transfer of assets? So if it involves the transfer of assets, if you've answered yes to this question, then it might be a DeFi service. Now, you can have a decentralized service for file storage, for example. file storage doesn't involve the transfer of assets. So even though it is a decentralized service, this is not DeFi. So it does not involve the transfer of asset. But if you pass that first question and you've answered yes, then the second question you should ask is it trustless? As in, can anyone participate? And there isn't essentially a consortium of people or a body that you can pinpoint to that these are trusted entities. So is it trustless? If it isn't, such as in the context of permission blockchain service such as JP Morgan's, for example, then if it's not, and that's not trustless, we know exactly who the participants are, then it's not DeFi. But if it is, then you can ask the next question, which is, and that's the element of control, do the users actually control their assets? And if the answer is no, for example, if the user is using a centralized exchange, or if the custody of their keys is with someone else and not with them, then that's not DeFi because there is centralized control. If the user is using a decentralized wallet, then it may very well be a DeFi service. And lastly, and this last question is perhaps a bit contentious because this is a new area, and there is a lot of confusion. But my take on it is the last question you should ask is: does it operate on an open infrastructure? If it does operate on an open infrastructure, such as a public blockchain, for example, then if you've answered yes to all of these questions, I'm pretty sure it's a DeFi service.
Oh, that's nice that we have this list with 4 questions that we can ask and see whether it's DeFi or not. And now let's say, yeah, we answered yes to everything. And then you mentioned this idea that for DeFi, is it open? Everyone can join, and you are in charge of you control your assets. What happens when things go wrong in this type of ecosystem when everything is open? And then you also mentioned that sometimes, yeah, regulation compliance can be limited or the oversight.
Well, what happens? You mean to the users?
To the users, yeah.
Well, I mean, we've seen, many news items when a DeFi service goes wrong. Essentially, at the end of the day, you lose your money because it's a risk. You're completely in control of what you're doing. You can make a lot of money if you're savvy enough, because using a DeFi service is not for the faint-hearted. You need to understand the technology. Using a decentralized service, you actually need to understand what you're doing. People who start first dabbling into crypto trading or such likes will probably use, maybe a PayPal or newly a Revolut, for example, as we know. But for those who are more technically aware and know what they're doing, they can make a lot of money on DeFi, yield farming as opposed to savings. You can make a lot of money, you can lose a lot of money. Flash loans, we know what happens with those, where you can actually settle on a transaction almost immediately, which I find quite rather scary, but people can make a lot of money at it. So in terms of the risks, the risks are there. What can you do? Well, you need to know what you're doing, and you need to be prepared to lose your money, because at the end of the day, it's a bit like gaming. It's a bit like gaming. There is a risk involved with it.
So it's education, responsibility, and risk taking from your part. Your risk appetite. Yeah,
absolutely. And due diligence, as with any service. Due diligence. Who are you? Whose services are you going to use? What kind of organizations are there? We hear such a lot about fraud and how people get defrauded and everything else. So it is a risk to be taken, and be in it if that's what you want to do, with your eyes completely open as to what you're doing.
Yeah. We talked about traditional finance, now DeFi. Can these services coexist? I mean, in a way they can, because we all talked about consumers, and it's about, yeah, their risk appetite and their comfort and their education around some products. So if they're not that, I don't know, they are more lazy and they want something traditional, easy, they would probably go to traditional finance. So can this coexist? Also, let's say combined in the way, or
Oh, absolutely,
probably all flavors.
yeah, all flavors, and we started to see this term called CeDeFi. So centralized, decentralized
Yeah.
finance, which is essentially a hybrid. So it's a kind of hybrid infrastructure, and it's kind of a merger between CeFi and DeFi. So you essentially offer DeFi functionality within a centralized framework. So, and there are some interesting things happening in that area. But the first thing is CeDeFi. The first bit is CE, which obviously is centralized control. So you will have known and trusted organizations that actually manage the core functions. So that gives you the kind of trust and efficiency side of the equation. Then you get security as part of this because they're taking advantage for some services of blockchain infrastructure, so such as the automation and such as the immutability of the record. So you get that kind of element to it with institutional oversight because it's
Yeah.
with centralized control. So what you also get is transparency when transparency is needed, because of course we have a shared ledger, which actually increased the transparency across participants. But that transparency is of course limited by the centralized oversight that we have in this particular framework. So, of course, you can have automation as part of that. So, blockchain automation, smart contracts, and stuff like that, which will speed up or may speed up, depending on how the system has been designed, the transactions that happen within. And of course, because there is a CE element to it, we have regulations. So it operates within the regulatory frameworks that are actually applicable for the particular product or service. So you've got these three things in there. So just kind of to wrap up, sort of a difference between the four type of framework. So you've got traditional finance, so banks, for example, operate traditional finance, traditional card payment companies. So all of this is actually TradFi. Then you've got CeFi, which is essentially centralized finance. So we're talking about financial institution with blockchain integration into their own framework. So, for example, custodial crypto exchanges or centralized exchanges, such as they're known. You've got an area of this whole space which is heavily regulated compared to others, and that's those that deal with securities. So we know securities worldwide, now this is not particularly payment, but securities worldwide are heavily regulated. So you can have obviously securities on blockchain infrastructure, depending on what they are, tokenized, real world assets and so on and so forth. So security token offerings, which is kind of the very, very regulated side of crypto trading, those are heavily regulated. Those qualify as CeFi, centralized finance. So then we've got CeDeFi, which is the bridge between obviously TradFi and DeFi. So that's a hybrid, as we said earlier on. So, and these will be platforms that offer some DeFi features, but there's centralized control over the assets. So there's still an element of decentralization. So then you've got the completely decentralized side of things, which is DeFi. And what do we have in there? Well, basically self-custodial wallets. So those where you actually control your asset. You need to know what you're doing to do that, because you are completely in charge of your keys. If you lose them, you've lost your money. It's as simple as that.
Mhm.
So decentralized exchanges are also a DeFi service. You've got DeFi trading, yield farming, as I mentioned earlier on, peer-to-peer lending, and so on and so forth. So this is the whole gamut of this. This is a very short sort of explanation of all these particular frameworks. I've got a very, very large table that explains the difference between all of this in beyond payments for people who are interested in these things, which are rather fascinating.
Yeah, and talking about now evolution of payments, do you see all these types of systems existing over the next 5, 10 years, existing together, or some will evolve, some will dominate, some will disappear? What do you think? So how
I
should payments evolve in the next
so the payments will invariably evolve. Products, services will disappear. Some will be launched by incumbent players, and then they'll decide, well, maybe it's not for them. So it'll move on. Will there be a blurring of lines? Absolutely. All the major players are dabbling in crypto and blockchain infrastructures, and they're trying it out. If it works, then it'll stay. If it doesn't, it'll disappear. Does it mean that the industry will get smaller? No, not by any means. It will carry on growing and evolving at pace. There will certainly be a blurring of lines where if we have this chat again, Mirella, in about 5 years' time, we'll probably be thinking nothing about going to your traditional banks such as Santander or HSBC and being able to have an account where you can actually trade cryptocurrencies within your whole banking infrastructure, because that's what is being done right now with the young players. So the digital banks are kind of already moving in that direction. The risk-averse incumbent are kind of looking at it. There will be lots of partnerships that enable them to do that. And in 5 years' time, we will actually think nothing of it. And maybe in 5 years' time, where we ask, anyone in the street, or particularly as Gen Z, so how's your yield farming going today? They
Mhm.
know exactly what you're talking about.
Yeah, that's interesting. And we even not touch upon geopolitics, because I have a feeling that this will also influence the payments and the evolution of traditional finance and DeFi.
Oh God, Mirella, absolutely. Without getting into politics of late, but if we look at what is happening, and invariably, dependency on the dollar, which is being questioned at the minute. But if you're looking at what the BRICS are actually doing, and they've been talking about this for years. Let's make no bones about it. They always wanted to have independent payment systems. They always wanted to explore this and trade within the block and so on and so forth. And there's lots of pilots of interoperability and all of those things. And now I read, I think it was yesterday, the Central Bank of Russia is now pushing forward their plans for a CBDC to 2026, which is much earlier than what they were thinking of doing. So you can see the effect of what's happening in the world into to the payments industry at a macro level. So yes, it will be very, very interesting. Suffice to say, the regulation will play a big part, because when we start talking about this space, anti-money laundering, KYC, and all of those things that we used to will become ever more stringent. And let's be honest, when we talk in a geopolitical context, regulations can also be weaponized, because payment
Yeah.
systems are systemically important. So it's interesting to see how the world is actually evolving, closer to home. If we look at, and this is not to do about blockchain at all, but if we look at what's happening in Europe with the
Yeah.
Wiro wallet and EPI, which is essentially trying to, create a new infrastructure that is not dependent on American companies. So when you look at that, it's actually quite fascinating. It's a bit like the soap opera of
Yeah.
payments. Yeah.
And topic for your fifth book.
Absolutely.
And we have to think about the color for that one.
Absolutely.
Because yeah, you mentioned having a fourth one, orange one, and then yeah, I think geopolitics plays an important role.
It does.
Yeah, thank you, Nira, for today's talk. It was a lot of things to to take home and to kind of let it sink. But now I'm curious to know where can users, readers, audience find more about the book. Where can they buy it? Or
Okay, so the book obviously was published by Routledge. In fact, all my books, so they're obviously available on the Routledge website, but they're of course available on Amazon in many countries, and there are many other local booksellers, so they can be found there. It's quite easy to do. If you Google Beyond Payments Neira Jones, you'll find me.
yeah, great. Thank you for today's talk, and I look forward, yeah, for having another chat.
Likewise, thank you, Morella.